Welcome back to Islamic Finance Unboxed, the channel where we make complex Islamic financial tools simple and practical. Today, we'll zoom in a lesser-known but incredibly powerful concept in Islamic finance, kafala. What is kafala? How is it used in the modern world, especially in banking and trade finance? What makes it principally different from ordinary financial guarantees? Stick with us as we break down this trust-based concept and see how Islamic finance offers security without compromising Sharia principles. What is kafala? Let's start with the basics. Kafala in Arabic literally means guarantee, surety, or sponsorship. In Islamic finance, kafala refers to a contract where one party, the guarantor, takes responsibility for the debt or obligation of another party. So if the original party fails to fulfill their commitment, whether it's repaying a loan or delivering goods, the guarantor steps in. It's important to understand that kafala doesn't transfer the obligation. It only puts an extra layer of responsibility. Both the original debtor and the guarantor remain liable. In simpler terms, imagine a friend vouching for your car loan. If you default, the bank turns to your friend to recover the payment. That's kafala, but based on ethical and Sharia-compliant principles. Sources in Islamic law. Kafala has a strong foundation in classical Islamic jurisprudence fiqh. The concept is supported by hadiths. One particularly famous hadith is narrated in Sunan Abi Dawud. The guarantor is liable. This short but profound narration clearly shows that the person who agrees to guarantee someone else's obligation becomes legally liable. All four major schools of Islamic thought, Hanafi, Maliki, Shafi'i, and Hanbali, accept the validity of kafala with minor differences in conditions and application. Key conditions of kafala. For a kafala contract to be valid under Shariah, several conditions must be met. 1. Consent of all parties. The guarantor must give consent freely and with full awareness. It cannot be forced. 2. Clarity of obligation. The subject of the guarantee, whether it's a debt, delivery of goods, or completion of a service, must be clear, specific, and measurable. 3. Known parties. The identity of the principal debtor, the guarantor, and the creditor must be known and agreed upon. 4. The guarantee must not be paid. This is important. Kafala is not a paid service in classical fiqh. The guarantor is not allowed to charge a fee. The act must be voluntary or based on goodwill. However, modern scholars and institutions do allow administrative costs or service charges if they only cover real expenses, not profit, which is a key distinction. Types of kafala. There are several types of kafala based on what is being guaranteed. Here are the three most common. 1. Kafala of person, kafala by al-nafs. This guarantees a person's presence, for example, appearing in court or fulfilling a contractual obligation. 2. Kafala of debt, kafala by al-dain. The guarantor ensures repayment of a specific debt, common in Islamic banking. 3. Kafala of performance, kafala by al-fa'il. Used in trade and construction, this guarantees the performance of an action, like delivering goods or finishing a project. Each type serves different needs, but the principle remains the same: ethical responsibility. Kafala versus casual guarantees. Here's where Islamic finance shines. Casual guarantees are often sold as commercial products. You can buy a guarantee, and the guarantor, usually a bank, earns a profit from it. In Islamic finance, kafala is not a profit-making activity. It's an act of trust, responsibility, and social solidarity. That's why Islamic banks do not charge for kafala unless there's a justified administrative cost, not a commercial price. Furthermore, in casual systems, interest can be involved if the guarantor pays on behalf of the debtor and charges back with interest. In Islamic finance, no riba, interest, is allowed in such cases. This makes kafala especially attractive for people and organizations looking for financial services that align with their values. Real-world applications of kafala. Kafala isn't just theoretical. It's widely used in Islamic finance today, especially in Islamic banking, where banks act as guarantors for customers and business transactions, or import-export financing. Trade finance. For example, a bank may provide a performance guarantee, kafala, for a construction company working on a government contract. SME financing. Small and medium-sized enterprises may struggle to get loans. With a third-party guarantor, they can access Sharia-compliant funding. Microfinance. Community-based kafala can be used to help individuals access Card Hasan loans by involving local guarantors. These real-world uses show that kafala isn't just a moral ideal, it's a practical financial tool. Kafala in modern Islamic banking. Modern Islamic banks have integrated kafala into several products, including bank guarantees. These are structured as kafala contracts, for example, bid bonds and performance bonds in infrastructure projects. Letters of guarantee, provided by banks to reassure third parties that the client will fulfill their obligation. However, scholars and regulatory bodies like Al-Wafa, accounting and auditing organization for Islamic financial institutions, emphasize that fees must not exceed the actual administrative cost. So while the format may resemble conventional instruments, the intention, structure, and pricing must comply with Sharia principles. Social and ethical value of kafala. Kafala also carries a powerful ethical message. It promotes mutual support and trust in society. By vouching for others, individuals and institutions create a more connected, caring, and responsible economy. This is in line with broader Islamic values like takaful, mutual solidarity, qardasan, benevolent loans, zakat, wealth redistribution. Kafala is part of the ethical backbone of Islamic finance, where profit is pursued with purpose and responsibility. Is zakat the corresponding tool of taxes in modern societies? Does wealth redistribution cover the cost of public services such as health, transport, and education? These questions will be addressed in another episode of Islamic Finance Unboxed. Let's park it a little bit. To wrap up, Kafala is a Sharia-compliant guarantee contract. It's based on trust, not profit. It has strong roots in classical Islamic law. It's actively used in modern banking and trade finance. And it reflects the ethical mission of Islamic finance to build an economy that's just, transparent, and spiritually grounded. So next time you hear about a guarantee in finance, ask yourself, is it ethical? Is it fair? Or is there a better, Sharia-compliant way, like kafala? Thank you for watching Islamic Finance Unboxed. If you found this episode valuable, don't forget to like, comment, and subscribe. Let us know in the comments, which Islamic finance topic should we break down next? Until then, stay curious, stay compliant, and stay connected.